Hey guys, welcome back. In today's video, we are talking about how shorts are facing huge losses, the liquidity issues, synthetics exposed, and many more in this video. First, we're taking a look at this. Short sellers face huge losses. So recently, stocks such as Krispy Kreme, Open Door, and Kohrs, all heavily shorted, have experienced significant price increases. This suggests that investors are betting on a decline, but shorts are now sustaining losses. And now it's not just that, you can see also from May 22 alone, the losses have exceeded $100 billion. Investors betting on a market decline, especially in the Magnificent Seven, tech stocks have suffered losses over $35 billion. So if you want to see how overall short sellers are doing, they are all doing extremely bad. We're seeing them lose money in all aspects of their positions. Now, with this particular Mag 7 losses, we have to realize is that they've also used long Mag 7 stocks as collaterals as well. Now, whilst they are taking some hits on their liquidity, on their capital, they obviously still have that collaterals that they're using on shorting AMC, on shorting GME. But when we understand is that most of their positions are losing money and they aren't able to actually find ways of fixing it, we're seeing how they are drying up. We're seeing how they're lacking to suppress AMC and GME. And it's why recently, we're seeing the breakouts of AMC, we're seeing the breakouts of GME, we're seeing the glitches of GME as well. It's because they're failing to do so. And so these weakening in their suppression, in their manipulation, it's obviously indicating to us what is actually going on with the short sellers. And you can also see quantitative hedge funds just suffered their biggest drawdown since 2023. Imagine being paid to manage money and losing during a ferocious bull market where we're seeing liquidity issues. Now, this should be the biggest clue to how short sellers are doing right now. They are all facing drawdowns. When we talk about why some short sellers are flipping their positions in long on AMC, why we're suddenly seeing the increase in FUD on AMC. Now, there's always been FUD on AMC, but recently we've seen a lot. We've seen how some institutional owners have came out and talked bad about AMC, right? And so we're seeing all of this, and there's a clear reason. It's because they're all facing drawdowns. They are all lacking liquidity. They're all losing a lot of money. And so whereas in the past where potentially the drawdown wasn't as big as right now, or where they had extra liquidity, they could obviously suppress AMC. They can short AMC. But now, as we're seeing them struggle to manage their exposure, to manage their risk, to manage their capital, we're suddenly seeing how all of them who once wanted to short AMC have all flipped long on AMC. And this isn't me just saying it. We've talked about in the past before in our previous videos how Goldman Sachs have sold their put positions and bought calls, how they've also long on AMC. We talked about Discovery being increasing AMC and AMC being the biggest US equity stock, and many more institutions as well, right? Institutional accumulation has been something we've been looking at for a very long time. And the reason for that, we clearly understand, is because they realize they can't continuously suppress AMC. It's because they realize just how much potential there is with AMC, and they're failing to continue to short AMC because they can't make money and they can't continuously afford to lose money. You can also take a look at some other things. So we obviously talked about the collaterals, and we used some of the stocks in the past in terms of where they get the collaterals from. You can see hedge funds must be hurting. Looks like they had to cash out of the hedged Chipotle stocks to pay their Ponzi elsewhere within the market. So we're seeing how they're cashing out on some certain stocks. Now, we talked about how previously they were using stocks like Nvidia, Amazon, all of these other stocks where that is the reason for why we're seeing how they had liquidity and capital to suppress AMC. We talked about with crypto, when we talked about with these stocks, and as we're seeing them failing to do so, as we're seeing them running out of capital, you're going to be looking at some stocks that should be going up, but actually going down. But that's because they are forced to close these positions down, because they're forced to actually get that liquidity into pumping somewhere else. In this case, to continuously suppress AMC and GME, especially the fact they couldn't suppress AMC forever. And now as we see AMC obviously up 20-30%, they need to continuously do so once again. And now another thing and to talk about, almost all trades are OTC or dark pool. Ban dark pools or suspend them and see what happens. There are no shares, just phantom fugazi shares being sold over and over. Now, one of the things we've always talked about is obviously with dark pool, but another thing is OTC, where it's over the counter. And what we're looking at here is that these securities are traded directly between parties rather than on major exchanges like NYSE or NASDAQ. And so this is very important to talk about because we've seen how AMC shares have been traded OTC. And it's why we talked about how when we looked at in the past with the real price of AMC, when we were shown data how AMC was trading at $500 per shares, how AMC was trading at $1,000 per shares, that's because they were capturing some of the OTC trades because they realized there isn't, and we know this as well, there isn't enough supply of real AMC shares. And for some firms who needs to settle, who have faced the FTT issues for so long, and they need potentially 1,000 shares, 10,000 shares, 100,000 shares of AMC to settle, and they don't want to buy it for real price on the market, they obviously use OTC. And so these firms are willing to, of course, give a discount. So if they wanted 100,000 AMC shares, the apes are obviously going to ask for $10,000, for $100,000, or for whatever price you have in mind. But the shorts know that as well, and it's why they don't want to buy. And when it's not a large amount of shares, when they don't need 100 million shares, when they don't need 10 million shares, but only 10,000 or 100,000 shares, then they're obviously likely to do these OTC trades with other parties, in which they can potentially buy it for 50, 100, 200. So it's still above market price because we're sitting at 336, but it'll be obviously way cheaper than from retails, from apes. And that's why these OTC trades are being abused by them. But like I said, this is only because they don't need a large amount of shares. When they are in need of large amount of shares, that's when we'll get them. That's when we'll be able to offer the price we've always wanted. And so it's become a time of when they create enough synthetics and they can't fulfill that anymore, where they can't sustain it in the OTC market, in the dark pools, that's when we'll see the squeeze obviously happen. And you realize billionaire loses his yacht and 25 supercars due to commercial real estate and loans. Let's play in the world's smallest violin. This will be Griffin if the SEC will ever enforce FTDs and share settlement stocks of stocks like MMTLP, AMC, GME, and of course more. And so recently there was news, and we can see here, about how the real estate loans defaulted and they lost hundreds of millions of dollars, right? And the same thing can happen because we know. So a lot of people think that because, Ken Griffin, because Citadel have billions of dollars, they will never be beaten. That is wrong. We've seen it happen in markets. We've seen it happen in the stock market. We've seen it happen in the real estate market, and we'll see it happen in all these other markets as well. And so you have to understand is that we have the power to obviously do this as well. We have the power to put them in the position where they're going to lose hundreds of millions of dollars, where they're going to lose billions of dollars. And so that's what we have to realize, and that's what we obviously have to do. And so this is the power that we will have. And you can also see, because Citadel knows this, is why we're seeing them push back on tokenization. We've recently been talking about how Citadel's pushing back on tokenizations, and we have to realize we talked about how they were once used against us. But the thing and the reason for why they're pushing back is true blockchain creates a transaction record and controls around shares, which will put a final blow to the liquidity fairies and synthetic shares, only if used as intended, which is an optimistic/idealistic view, but the tech does indeed exist. That's why Citadel and others have fought it for so long. So we have already seen evidence. We've talked about the quadrillions of AMC tokens that's used out there. We've seen how FTX themselves talked about how these tokens were used to be backed as one-to-one shares and then used to locate and to short against us, right? We've seen how they were used. We've seen the existence of these shares. But what furthermore is that if we are able to see the true use of these records, we not only are able to catch who exactly uses it, but how many synthetics are being used. And if used correctly, if regulated correctly, we can actually limit the infinite liquidity that they are abusing right now. And so that's why we're seeing Citadel obviously push back against this. They're talking about how this is going to affect market integrity, but little do they talk about how they've used it to already damage the market integrity. And the only reason why they're doing this is because they realize if we are able to get the true use of these tokens and they're regulated correctly, then all of the synthetics which they've used in the past before, how much they've used, how many synthetics, how they used it, how much they damaged AMC, and all of these data will all be shown to us. And that's what they're trying to avoid. But yeah, guys, thanks for watching the video. I'll catch you guys next time.